You're watching Sitka Community TV. Be sure to like and subscribe if you like what you see.
Senior Vice President of Treasury, Doug Lagenberger, will share how Northrim's new and enhanced services can assist you in reaching your strategic business goals. On the back table there, where it is an Enter to Win, we also have some additional materials about our Treasury management services, so please help yourself to those as well. After Doug's short presentation, we will transition to our next presenter, so it'll take us just a few minutes, but please stay with us, make sure you get plenty of lunch, and we'll hope to make this an enjoyable afternoon for you all. So a little bit about Doug. He has over 30 years of experience in working with customers, finding customized solutions for their needs. And he's really helped us build our products and services in this category. So thanks for joining us, and please welcome Doug.
Somebody else, Eileen Peyton Gilbert, was scheduled to present today. She has some travel challenges, and so you're all stuck with me today. My name is Doug Lagenberger. I'm the Director of the Treasury Management Services for Northrim Bank, and just want to share a high-level overview with all of you today, what things that we have to offer. Before we jump into the Treasury services, regardless of what we have and what we can offer, it really doesn't mean a lot if we don't have like the structure and the people to stand behind what we offer to you. And so one of the things that I'm really honored to be a part of is that Northrim truly is Alaska's community bank. We have locations, branches in 19 different locations, with over 400 employees supporting the Alaska community. This isn't all that we have to offer. We're obviously still looking for opportunities to expand into other areas as well. So what does Treasury Management do for you? What does Treasury Management do for us? It can do a lot of different things, but why should you be thinking about Treasury Management? Every day, all of us get up, we're rested, we're refreshed, and we head into our work, our office, with every intention of tackling our work, completing our plan, checking things off our list. And in a matter of minutes or hours, at some point of the day, something is going to cause some disruption in your day. It could be a system is down. It could be a customer is not happy. It could be a trading partner is providing challenges. Hopefully not, but it could be somebody attempting to conduct fraud against your business. And so these things are happening continually throughout the day. And one of the things that we are able to do from a banking standpoint is potentially offer you products and services that can help minimize some of those disruptions and some of that risk that you could be exposing your business to. So again, I talked a little bit about the community, the extension of our branch network, and that's great. But the branch network products and services that we have, they're still dependent on something even bigger. And that's the 400 plus Northrim employees that throughout the Alaska. If you bank with Northrim Bank, you don't get just one individual support. In some instances, there may be no individuals supporting your business or your account. At Northrim, you get a team. And this slide just demonstrates very high level what that look like. Regardless of what your needs are, regardless of the services that you're using, at Northrim Bank, you always have a team of people working either directly with you or in the background to support your business. This collection here, the commercial lending team, the branch network team, and the treasury management team, we work on a regular basis together. On any given day, someone may call any one of these groups with a question or a challenge, and regardless if that individual is the right person to assist that customer with that need, we work internally together to make sure we get the right resources lined up to help with whatever you might be calling in with. So I want to talk a little bit about the treasury management products. For the past several years, Northrim Bank has made significant investments in technology and in technology partnerships. And I am privileged to have the opportunity to lead the treasury management team. And more importantly, I'm privileged to have the ability to offer all of you the full suite of products and services that you might need that any other bank in the United States could potentially offer you. So while we are Alaska's community bank, Northrim Bank has made significant investments so that we can provide you the products and services that you need. So I typically start off with the regular cash flow process, start with collections, move to disbursements, etc. But given the dynamics of the market, I think it's important to start with liquidity management. For close to 15 years, interest rates have been at record lows, and honestly, we didn't have the ability to offer you much, if anything, in terms of interest on deposits. In the last year and a half, there's been significant movement there. And in under 18 months, those rates have increased, the Fed rate has increased by 5.25%. And with this rapid acceleration of rates, we now find ourselves in a position where we can offer you the ability to actually make interest on your money. So it's kind of exciting to be back in this area, but I just want to make sure that everybody's aware, number one, if you have excess balances, you should be earning interest. And then number two, we need to talk about the safety and security of your deposits. So as the rates were increasing so rapidly over the year and a half, another thing occurred, and it was unfortunate, but there were two banks that had some challenges and ended up having to liquidate. When that happened, there was a little bit of panic in the marketplace. Companies were thinking about if their deposits were secure, if they need to do something different with their deposits. And so, while it's exciting that we have the ability to earn interest on our money, I want to cover with you today a little bit about the different services that we have available and also could provide you the security you're looking for. So if you look at this liquidity management slide, the first two offerings are liquid investments. They're overnight investments. The second two, or the last two, investment options are certificates of deposit, so those require a time requirement. The very first one, the IntraFi Cash Service. For over 20 years, Northrim Bank has been a member of the IntraFi network. And the IntraFi network today it's an organization that consists of over 3,000 community banks spread throughout the United States. With this IntraFi Cash Service, we have the ability to invest your money on a liquid basis overnight, but at the same time provide you with full FDIC insurance of your deposits, regardless if they go to $800,000 or $250,000. How this service works is if you invest something greater than $250,000, behind the scenes, your deposit is split up in increments of less than $250,000 and assigned to the IntraFi network member banks, ensuring you that your money is fully insured when it's invested for you overnight. If by chance you have a little bit of an appetite for a little bit more risk, we offer a business sweep checking, which is also an overnight investment. This sweep is not FDIC insured. Instead, it's backed by the strength and security of Northrim Bank. And so again, depending upon your risk policies and risk tolerance, the business suite might be appealing to you because it offers a greater rate of return. The next item on the list is the Certificate of Deposit Account Registry Service. We like to call that CDERS because it's easier, but this is a CD through my network. So just like the IntraFi Cash Service, the CDERS account allows you to put balances in excess of $250,000 into a single CD. Behind the scenes, we protect that money by divvying it up in smaller increments, but for you it's a single CD, earning a higher rate, and it's fully FDIC insured. And then lastly, we have what we refer to as our jump up CD. This product generally offers the highest rate of return. Like the Business Suite checking, it carries a small or slightly higher rate of risk with it. But it is unique in a couple of ways. Number one, it has one of the highest returns of our CDF products in the bank. But secondly, it allows you to add deposits. If you want to add balances to this at any time, you're able to do that. And then it also allows you to jump up the rate once or twice during the term of the service. And that really is dependent upon how long of a term you would choose. But all interesting products, and certainly something that we think every one of you should be thinking about. If you think you have excess balances, you want to know what your investment options are. Eileen, myself, Rena, we would be more than thrilled to meet with you, talk with you, and give you some ideas of what we might be able to assist you with. When we talk about the full suite of Treasury management services, I talked about investments in technology and partnership, and I'm not going to go into any great detail on our depository services, other than to say that we offer everything from the most basic up to the most complex service that you could need from a receivable standpoint. If you need access to a branch to make deposits, to complete change orders, to do those type of things, that's our network of branches located throughout the state of Alaska. If you're looking to automate, all of the things that you see on this screen we have available. Some of them are direct services that we've invested in, and some of them are partnerships, and some of them are a combination of the two. But regardless of how we're structured, we have the ability to customize and implement any and all of these services for you to assist you with your collections. On the disbursement side, we have the same breadth of products and services. Basic check writing, which we're trying to discourage, up to full automation of your disbursements and your payables. And I do want to take a minute to talk about a couple, this is on this slide. You're probably all familiar with wire transfers, you're probably all familiar with ACH, but in the last 2 years, Northrim Bank invested in and built 2 new products to make available to our customers. The first is a commercial purchase. And you might be saying, okay, it's a business card, how's that different than any other business card? This one is truly unique. Not only do we give you a business card solution in the form of a commercial purchase card, but we give you access to a wide array of technology that we put around that product. We have online banking capabilities to help you manage the commercial purchase card program. We have mobile applications to help you with the commercial purchase card program. It's not just a card, and we don't pay points. In the right circumstances, we actually pay you cash instead of points. But the way this product functions is it's supposed to take the paper out of your day-to-day activity, putting cards into the hands of your team and empowering them to make purchases when it's appropriate. As a card holder, as you transact, you have the ability on the mobile app to pull out your phone, open Visa Spend Clarity app, and take a picture of the receipt. 3 days later, when those transactions start to post, 80% of the time your receipts will be automatically tied to your transaction if you've taken the time to take a picture and upload them. Cardholders have the ability to download images of receipts, to reconcile transactions, and to submit transactions on their mobile device. If you are an approver, you have the ability to do all of those things, plus view and approve the transactions of those cardholders who happen to report up to you. And then at the top level, corporate administrators authorized by your company have the ability to manage the program, to manage the cardholders, and to leverage the technology to automate the reconcilement of these transactions clearing through that service. The other component of the commercial purchase card is we implemented our virtual card in our electronic accounts payable. And without going into extensive detail on this, this gives you the ability, if you have an interest, instead of sending checks, instead of sending us ACH files, instead of sending your vendors payments with a remittance, you have the ability, when you do a disbursement run, to send us, Northrim Bank, a payment file. We take that payment file, and working with you and working with your trading partners, we determine what the best payment method is. If you pass on remittance detail, we pass that on with the payment, and we can help you outsource 100% all of your accounts payable if you choose to do so. If you have an interest in just outsourcing one or two pieces, we can do that too. It's truly a la carte. But this is something that we've started offering both of these products and services last year, and they're greatly accepted and supported by our customer base. And then the last thing that we offer from a treasury management standpoint is our information services, or we probably more often refer to as our electronic banking. So we have a variety of things available to our customers through our electronic banking department. It does encompass things like wires and ACH and remote deposit capture, but it also includes online banking, mobile banking, and probably one of the most important things is fraud prevention services. At the opening of the discussion today, I want to focus on liquidity management because I think it's really important that all of you are aware that there's an opportunity for you to increase earnings for your company if you have excess balances. I want to close out the discussion on treasury management today talking about our fraud services and our fraud prevention. Over the past 12 months, we've seen a fairly significant spike in fraudulent activity. And I want to share with you just a couple of real live examples of things that happened with customers of ours. We had one instance where a customer had opened up a business checking account for the sole purpose of clearing each items through that account. The account sat widely unused for a period of about 6 months, and then all of a sudden, a check was presented against this account for $80,000. Fortunately, it was an unusual transaction. Our security group flagged the item as suspect. They contacted the Treasury management team. The Treasury management team contacted the lender. The lender and the team got in contact with the client. And just as we suspected, this was a fraudulent transaction. Not only was it a fraudulent transaction, but this customer had never ordered checks for this particular checking account. So somehow their account information had been intercepted. Someone went out and created and printed a check for $80,000 and presented it for that account. We have a service that we offer. It's called Check Positive Pay. And with this service, you have the ability, every time you issue a check, either through the file transmission or one-time input through online banking, you have the ability to tell us what checks you wrote, what the check numbers were, who those payments were to, what the payment amount was for, and all of that information is loaded into our bank platform. As those checks start to circulate and start clearing the bank, when they're presented and you're using check positive pay, we validate that information that you've shared with us against that check. If it doesn't match completely, those items are flagged as exceptions, and you, on a daily basis, are asked to go in and review your exceptions and make pay or no pay decisions. Similarly, we have a product that does that for ACH. We've had a few different instances of ACH fraud. But one instance that occurred in this year, we had a customer that received a call from a vendor. And that vendor called in to say, hey, I want to change my bank account routing number and account number. This is what my new number is. And so our customer, thinking that that was a legitimate call, made the change in their system for that routing number and account number. A short time later, a payment was due to that vendor and they processed the payment. Again, through a little bit of luck and a lot of skill with our security department, that transaction was flagged as a suspect item, and it did turn out that the individual that had reached out to our customer to change that routing number and account number was not the vendor, it was a fraudster. And so that payment was also stopped and our customer was protected. I talked a little bit about fraud. The ACH positive pay works the exact same way. If we set up ACH positive pay for you, you have the ability to review any ACH transactions debiting against your account before those items are cleared. If you by chance have a vendor that you work with on a regular basis that debits your account, we're able to build them in the system as a trusted trading partner with certain parameters around what they're able to do from a debit credit standpoint. But it gives us the ability to flag items that you have previously told us were okay and ask you to look at those items and make a pay or no pay decision. So that is a very high-level overview of what we have to offer in treasury management. There are some exciting new things coming out in the marketplace right now that we hope to introduce later this year or in the first quarter of next year. But if you have an interest in learning more about our products and services, liquidity management, fraud prevention, please don't hesitate to call your lender, your branch team member, or any member of the treasury management team. Thank you.
Thank you, Doug. And I'm just going to transition to our next speaker, or our next presenter, and at the same time I'll bring up our president, Mike Houston, to say a few words.
Well, good afternoon. I'm going to talk slowly to make sure we've got enough time to bring our keynote speaker up on the screen. I'm Mike Houston, president of Northrim Bank, and I'd like to welcome you to our 2023 Community Summit. We're really pleased to be here today to share our perspective on the Alaskan and national economy. I'd like to thank you for being here early so that you could attend the session that we just had with Doug Ladenberger. It's a little disappointing that, well, it's not disappointing that Doug wasn't here, but because Eiley, Hayden Jalbert, was supposed to be in attendance, and as Carrie alluded to, we had the Community Summit in Kodiak yesterday, which was a very nice event. And her travel schedule was supposed to get her in last night, and of course, as happens in Alaska quite often, she was not able to get out of Kodiak, so we're doing it virtually. And because she's on a plane on the way to Juneau as we speak, Doug stepped in for her. But anyway, I think Doug did a wonderful job of describing how we can help you prevent fraud losses, become more efficient in your disbursement and collections process, and earn money on excess cash balances. We really hope you found that information helpful. And if you have any questions after the event, we're happy to discuss those. And particularly Steve Manley up in the front here is kind of our resident expert on those cash management services. So this is our first community event in Sitka. I promise this will be great, but next year will be even better when Mark will be here in person. Not only are we excited to be here, but we want to thank all of you for joining us as well. We host these events because we understand that economic vitality and quality of life is critical to our customers, our community, our employees, and of course our company. We're committed to sharing our time, talents, and other resources to support our neighbors. As a community bank, we invest significantly in our communities and work hard to help you thrive. Our dedication to our values distinguishes Northrim Bank, that and the talent and attitude of our people, and their ability to collaborate with each other, with our customers, and with our communities. This has been a key to our success, and I'd like to introduce those from our Northrim team who are here today. I mentioned Steve Manley, commercial lender. We have Lauren Olson, our Sitka manager, Jed Ballard, Chief Financial Officer, Carrie Skinner, the marketing director and the person behind the curtain, Casey Campbell, commercial loan officer, Kevin Tillotson, our Southeast regional manager, and on screen we have Mark Edwards, our Chief Credit Officer, bank economist, and of course our keynote speaker. We share and strive our knowledge. We strive to share our knowledge of the Alaskan economy by publishing Alaskanomics.com as a resource for all Alaskans. Our blog provides news, analysis, and commentary on Alaska's economy and is updated regularly. Today's presentation will be available on Alaskanomics later this week, and we encourage you to visit that blog. Placing your business card in the box at the back of the room will subscribe you to Alaskanomics, and you will be entered to win a Yeti bag as well as lunch on us. Now we'll hear from Mark Edwards. Mark spent 5 years with the state of Alaska as an economist in the Department of Commerce and the Department of Revenue, and as a director of the Office of Economic Development before joining Northrim 16 years ago. Mark has a BA in economics from the University of Virginia and a master's degree in international business from the Thunderbird School of Global Management. He has extensive knowledge on how our state's economy functions and is constantly working to educate Alaskans on economic issues. We are pleased to have him share his expertise with you today from Kodiak. You're up, Mark.
Hello, everyone. Good afternoon, and hopefully you can hear me okay. I really apologize for not being there in person. I was looking forward to being back in Sitka. The last time I was there was for the state basketball championships of, I believe, 1992. So it's been a little bit, but I just dated myself, and I very much wanted to come back and see you all in person. A little fun fact that I just learned: the land of the Valley of 10,000 Smokes is an area here at my national park that there was a large volcanic explosion in 1912. And they're still getting ash from that occasionally in Kodiak. So the reason I didn't make it was Alaska Airlines stopped flying, the wind was just right, and it kicked up some 100-year-old ash that flew over Kodiak, even though it was a beautiful day, and the planes had to be stopped. So I really apologize for this. Couldn't have predicted that 100-year-old volcanic ash would keep me from Sitka, but I really was looking forward to giving this presentation in person. I just wanted to start by, I guess, talking about those type of extreme events that are happening over the horizon. I think oftentimes when we think about the economy, we look around at our neighbors and local businesses, and we think 90+% of the time of what's happening right around us. And when you're, for instance, standing near the shore and you see the waves coming in and the tide going out, You can think of that as your local economy, and what you can see right around on the beach or over the horizon, to the horizon, is really the local economy. But in this day and age, I want to focus on some of the events happening over the shore, over the horizon. That could just be, if all goes great, a 10-day sunny, sunshine and rainbow forecast, or it could be, in a worst-case scenario, a tsunami coming over the horizon. So let's hope it's not anything that extreme, but what are the waves that are making an impact? And so obviously at the national level, there's been a real significant change in the economy due to the government's response to COVID, and that led to $6 trillion in healthcare related federal assistance. And Carrie, if you could, I think you're unmuted. I'm hearing myself coming back potentially a little bit. So the $6 trillion in government spending has led to then a monetary policy response to raise interest rates to try to control inflation. So when you put $6 trillion in the economy, it went from 15 trillion in the money supply to 21 trillion. That's going to dilute the value of all the other remaining money that's out there in the economy. So if the same amount of goods and services are produced, but there's an extra $6 trillion, prices are going to rise. And they rose at 40-year historic levels over this last few years. And now, to try to control that, the Fed has dramatically raised interest rates in a very short amount of time. And I'll show you later the details. We saw a quick ramp up, and that's trying to control this inflation and slow down the economy. And that monetary policy response is affecting all of us, not just in the United States or in Alaska, but even around the world. Some other major geopolitical things that are happening internationally, as the news, unfortunately, this week of war in Israel, we saw a quick response to oil prices rising 5%. Clearly, as an oil-producing state, that makes an impact on our economy. The war and aggression in Ukraine with Russia has really moved to destabilize the global trade regime. So it was already in difficult situation post-COVID because of different international laws and travel restrictions and shipping issues. And then now with Russia and to some degree China and other potential partners like India, Saudi Arabia, Iran, Brazil, others are trying to form an agreement to not use US dollars as a trading currency. And what that means to me is that the global trade regime that we've become accustomed to for the last 20 years, you know, ordering something on Amazon, having it delivered in just a few days, things that are manufactured in China or just about anywhere are freely traded in a very easy, liquid international economy. That's starting to break apart to some degree for the fact that China is trying to become a world leader themselves and asserting more military growth around the country and what Russia's doing and others. So these types of things can really affect Alaska because we are an international exporter. We export $4 billion in natural resources directly overseas, and that doesn't count everything that goes through the United States. And then on top of that, militarily, certainly these types of changes have the potential to increase military spending. I'm seeing a lot of infrastructure spending that I'll get to here later in the presentation. So we can't forget that Alaska is directly in the heart of the global trade regime, and all of these political forces are having a significant effect both domestically, financially, as well as these international issues. So with that really broad context, let's try to then bring it down to the local level in 2022 and show where we were economically last year to start the discussion of Alaska's current economy. So on the next one, we can see in 2022, payroll jobs last year rose 2.4%. I'm going to get into more detail on each of these statistics here in a second. Gross domestic product, or GDP for Alaska, we call it gross state product, decreased 2.4% to $64 billion. Personal income though rose quickly, faster than the rest of the nation at 4.8%. A lot of that was helped by the permanent fund dividend. We're up to about $69,000 in per capita income for residents of Alaska. However, the CPI inflation index rose faster than that at 5.4%. So a big topic right now is can your income keep up with the inflation rate? And otherwise you're losing purchasing power over time. And that's been a big issue, and I'll show you in just a minute that is slowing, and we should see some reprieve on that coming forward. Also, interest rates rose dramatically. To put that in perspective, the prime lending rate at the beginning of 2022 was 3.25%, and it increased to 7.5% by the end of last year, and now is at 8.5%, with more increases occurring in 2023. Our population grew by only 0.06%, that's 450 people. We're about 736,000 residents in Alaska now. Housing prices continue to increase despite these very high interest rates, primarily because the supply of homes was much lower. There's not as much churn of existing homes and not as many new units coming online. So classic supply and demand issue. As an economist, I have to say supply and demand at least once, so they won't let me do this presentation. So supply is not keeping up with demand. And then oil prices have been very strong. Last year they averaged between $80 and $120 a barrel, and they're still in that $80 to $90 range, which is very healthy for the economy. Now let's get into a little more specifics on some of these issues. The jobs impact, I'm going to switch now to 2023. This compares a year ago, in August of 22 to August of 23. The first column is where we're at, total payroll jobs, about 344,000. This is the current number of payroll jobs in each of these major segments. You can see in the middle column year-over-year growth of about 1.4%. So the jobs are still increasing. However, in the final column on the right, I compared to 4 years ago, pre-COVID, this was the last August, pre-COVID, we're still about 8,000 jobs short. Now, I know there's a lot of jobs online and employers are desperately looking for employees, but it takes both sides of the equation. There has to be an employee looking for work. So unemployment measures the number of people actively looking for work who are unemployed. That number is under 4%. It's 3.9 in Alaska and 3.8 in the US. So what we have is a very tight labor market, partially because there aren't enough people looking for work, and I'll show you more in population numbers why that's a problem. So in the oil and gas industry, that is the largest or highest paying sector in terms of dollars. This is just the direct impact of oil and gas. So for instance, that sector is the leading private sector investor in the construction sector, which is the next line below. Both of those are growing healthy, around 3%. Construction and healthcare have actually surpassed the pre-COVID numbers of total jobs in August. So those are good sectors that have fully rebounded. Seafood is the leading portion of the manufacturing segment. We don't have a lot of manufacturing in Alaska. The second and much smaller is the growing brewery segment of manufacturing. So I guess they know their audience well in Alaska with seafood and beer. But the manufacturing, unfortunately, was down 2%. It was the only large segment that actually decreased year over year from August. There has been issues in the fisheries, not significant, but leading to a slight decline. Tourism is the next major one. You can see it has done very well, up 4.8% year over year. There was strong growth in 2022 as well. And that's a very large segment of our economy that has rebounded now very well post-COVID. Let's move on to discuss a few trends in HR and human resources related to these jobs, because I think that there has been a lot of changes since COVID. More people are forced to work second jobs, which they call side hustles now, to try to make ends meet with this strong inflation. You just need to be aware that there are more employees that maybe just can't work at your company and make ends meet and are doing other things. So we need to decide and understand that that's not just an individual issue, but a nationwide problem where people are working multiple jobs because of inflation and other demands. There is more, as I mentioned, a tight labor market does create wage inflation. We're seeing this wage spiral where employees need more money to keep up with inflation, which was 5% last year, but at the same time that causes companies to have to raise their prices, which then erodes the purchasing power through more inflation. So they call it a wage spiral. Child care cost has been something we hear a lot, is keeping people out of the workforce. There is more interest and a higher number of people working from home or working hybrid schedules in and out of the office. This also creates more IT demand so understanding that if that is demanded by workers, there is an IT component to that. But IT has also been very interesting because of the discussions recently about artificial intelligence taking jobs, but also just more in companies saying if the trained and qualified employees aren't there, I'm going to invest in computers, everything from kiosks at fast food restaurants to us doing more of the work ourselves online by typing in our own data rather than having somebody out there on the other end of the phone inputting data. But it's really pervasive in more industries than you think. And so the largest companies are making more long-term investments in technology that will replace humans, and that's going to be an ongoing issue. I mentioned lower enrollment in college. It peaked in 2010 in the United States, was the highest number of college graduates, and it's been in decline every year for the last 13 years. The other interesting statistic is that women now account for 60% of college graduates. And that 60-40 split is pretty dramatic and really been an ongoing trend over the last decade. So trying to make sure that these younger students are getting back into school and after COVID, it's really going to be an adjustment time. And so I mentioned that for you business owners as it relates to your job qualifications and whether you require certain levels of education. Those things might need to be rethought or adjusted given today's environment. One positive thing, we spoke with people from University of Alaska, said that they're actually seeing enrollment tick up this year for the first time. They've done a really good job of trying to marry the degrees that they're offering with Alaska jobs so that there's more demand for people to stay in the state and find employment for careers that are needed in Alaska and in short supply. And that's helped their enrollment rather than just a broad general education of any national kind of school. So we're seeing some positive trends in Alaska this year, which hopefully will turn that around. Now let's talk about population. The demographics I mentioned about having access to available employees. This graph goes back to 2013, and you can see where we are in 2022 is really where we were in 2012. Our population did increase slightly at the beginning of the decade, but it's fallen, now rebounded the last 2 years. But the overall effect of the last 10 years is no population growth. And what's hidden within that is there's actually less working age people where we have a growing under 18 population, we have a growing retiree baby boomer population, but hidden in this is less working age people. Let's go to the next slide and really kind of break down the components of population growth in a little more detail. First we call natural rate of increase, births minus deaths. And you can see again, this is over the last 10 years on the far left side. There was only 4,000 deaths and 11,300 births, so over 7,000 gap there in natural increase. But if you go to the right side, those both have narrowed. Births have fallen by 2,000 a year, and deaths have increased by over 2,000 a year. Some of that is somewhat attributed to the COVID pandemic more recently, but a lot of it has to do with the aging population demographic, which is not just in Alaska, but all over the nation and in many parts of the developed world. But you can see there that gap of just about 3,000 natural births is a significant change from 10 years ago. And it's just barely offsetting the bottom red part. So that is net out migration is larger than in migration. So for example, last year, 44,500 people moved into Alaska, but 46,995 moved out. So a difference of about 2,500 people net left the state. The numbers are very large because of the military churn, but relative to our population, that's a pretty significant change. So we just outdid the out-migration by about 500 people last year. But to me, the most important part is for 10 straight years, we've had negative net out-migration in the state. So that makes that labor market tighter, that makes the ability to find qualified employees harder. And the trends of all of these factors have really net and flat. But again, you can see now why there's these non-working age population component is getting larger. Now, what does it mean? Let's go to talk about gross state product. GDP, or gross state product, is in economic terms all of the value-added increase of goods and services in your state within a year. So Alaska's GDP, or gross state product, decreased 2.4% in 2022 and only increased 0.3% in 2021. This was the slowest of all 50 states for the last 2 years, and actually the slowest for 4 out of the last 8 years. So that's a difficult stat, but I really do believe that it's not indicative of the next 5 or 10 years. I'm going to give you some reasons coming forward why I think some of this is going to turn around. And really the inflection point is in the middle of last year. I tried to highlight in red there, if you can see, the first 2 quarters of 2022 were very negative, most of them negative in the first quarter. But then by the third quarter, the gross state product of Alaska started to turn positive, and we have data just for the first quarter of 2023, which was also positive 1.6%. So we've had 3 consecutive quarters in the state of gross state product increases, and though it's not super strong growth relative to the rest of the nation, it was at 2.2%, so we're not too far off. We'll have the second quarter data here within the next month, and that puts us at about a $64 billion economy, to put it in perspective. Now, to switch to personal income, the reason we all work is to try to make money, and the wages last year in Alaska grew by about 4%, whereas the national increase was 4.8%. So we're not too far behind. But we did receive over a $3,000 permanent fund dividend, which made us very different from the rest of the nation. We actually increased in government transfer payments at a time when the rest of the country was falling off of COVID payments and actually decreasing. So in terms of total income from investments, wages, and the government, Alaska was at 4.8%, the rest of the nation only grew by 2.4%. However, as I mentioned before, that did not quite keep up with inflation. The other way I can look at this data is June to June. We have of 22 to 23, the growth rate was about 3.3% over the last 12 months. Again, there's some trailing data here. June is the most recent that I could get. So our personal income is just over $50 billion. It is growing in Alaska. And on the next slide, we'll talk more specifically about inflation. So remember that 3.3% number is the most recent annual. And then on the next slide, you can see the Consumer Price Index. The CPI in Alaska only increased 2%, whereas the national increase was 3.7%. So our inflation is relatively low relative to the nation. Now, I know everyone's going to also react to say, hey, the prices are still really high. So just to be clear, this is the rate of change over the prior year. So inflation is still occurring, prices are still increasing, they're just increasing at a slower rate. And 2% is really the rate which the federal government tries to target, because they assume that if the economy grows at 2%, then you can absorb a 2% growth in inflation. What you don't want is inflation growing at 9% and the economy growing at 2%. That's where it starts to be out of balance. So What I see here is that housing is the most important part. Yes, it's ran up really high over the last several years, but it is starting to slow down. What we're seeing nationally is rents have been high, but they're really hitting a ceiling where people can afford, or we call the affordability index of the percentage of their income. And I don't expect too many more increases in housing prices. Energy has also been very high, but it's actually come down slightly from last year, and it should remain at these, $90 a barrel type prices. But it shouldn't mean relative change going forward. We don't expect either of these two major categories to continue to increase in the way that we've seen over the last few years. So hopefully the Fed, through these interest rate increases, has gotten control of inflation. We're doing relatively better in Alaska than the rest of the country through August of this year. Now I'm going to try to attempt to explain on the next slide the money supply and how that inflation occurred. This is probably the most complex slide, so hopefully everybody's eyes are wide open and focused, because this is a little deeper dive into economics. But this goes back to January of 19, and the money supply was growing. So what is the money supply? That's really all the money that you have in your wallets and purses and keeping on you personally, plus your checking and savings balances and your money markets and CDs. So nationally, at the beginning of this graph, we were at about 15.4 trillion in money supply. And then with all of that government deficit spending and COVID relief, it ballooned up to 21.6 trillion. So that's the mountain in the middle. So this is a rolling 12-year average of money supply growth. What you can see on the far right side is that about a year ago, at the beginning of this year roughly, the money supply started to shrink. So no, we weren't out burning $100 bills in the streets or anything, but the money supply shrank, and people were wondering how can it happen. Well, first of all, it's really hard to think about because it hasn't happened in over 70 years. The last time the money supply actually went below the 0% line was in 1949. So this is, again, like inflation, historic changes in the economy, and that's why I began this speech by talking about, what's happening over the horizon and how it's important to pay attention to these changes, because these really are unprecedented changes for decades. So there's three quick ways to understand why money supply might shrink. One is, as we print money, most of it is going overseas. 2/3 of all of the $100 bills are in reserve currencies in foreign countries. They're not in the United States. So you can think of that as a interest-free loan of the federal government. They get to print the money, spend it, and then it just goes and sits in a vault in some foreign country. That's probably the simplest one, but most of the money is not physical currency anymore. The banking multiplier effect is when banks receive your deposits and then they loan out against the assets of things like your home or your buildings, the commercial buildings, or your cars or boats or whatever assets you have. That creates more money in terms of leveraged lending, of sort of drawing value out of physical assets rather than $100 bills. When banks slow down lending and they have less of a multiplier effect because either A, they're holding more capital, which is occurring in many of the very large banks, they're reducing their lending activities as a ratio to their deposits. All of these things tend to slow down the velocity of money and slow down the money supply changing hands. The third and also very complicated way to think about is the Federal Reserve balance sheet. So over the last decade, the Federal Reserve's balance sheet has grown to $9 trillion. Mainly, they're buying mortgage-backed securities, some of them going all the way back to the recession in 2007, and they're also buying a lot of U.S. Treasuries. Well, over the last year, during this time where it's been below zero, they've sold back $800 million of those assets into the economy. So when those investors buy those assets from the Fed, they have to take $800 million out of the economy to move them over to the Federal Reserve balance sheet, and in return they get assets. And if they're not borrowing or lending at the same rate on those assets, that creates the money supply. So I've given you three major reasons why this is even possible without burning the $100 bills. They're over in a foreign country, and we're using our money to buy Federal Reserve assets, and banks aren't aren't lending at exactly the same rate, they're holding more reserves. Those are the main reasons that's happening. So hopefully you learned something there. That'll be the deepest part of the economic dive. So you can drink a sip of coffee, and hopefully that was informational. We'll move on here. I have just a few more slides. I think we're all aware that this inflation is really a tax on people who save. If you've saved money, then your money is less valuable because it can now purchase less over time than pre-inflation. So that's it's also hurting lower income people more. They have less discretionary income to cut from their budgets. We're seeing increases in credit card debt as people are trying to borrow to maintain their lifestyles. When you have this type of higher interest rates, it causes less risk-taking and therefore less innovation occurs because people's hurdle rates for investments has to be higher to try to, so if you could borrow money at 4 or 5%, you're going to do more of it than if it costs you 8 to 10%. You're going to think twice about making that investment, and that can be one way that the economy slows in these higher interest rates. I mentioned here that there is probably more equity opportunities than normal in this environment, so companies that would have otherwise just gone out to borrow debt might need to go and look for private equity. So if you're not seeing investments that you like in the stock market or the bond market, there are, I think, more deals out there of companies trying to shore up their equity positions by offering some ownership percentage in companies. It's also important to understand that prices aren't going to go down anytime soon. Prices tend to be sticky, meaning they go up easier than they come down, and they often only come down if there's really intense competition in a market, which we typically don't see here in Alaska. I think it's really important to point out that nonprofits are suffering during these times with decreased donations. We've talked to several, and we begged several nonprofits that really see when people are hurting financially, they can't make normal donations. So if you are in a position that you can help these types of companies that really help our social services in so many other ways in our society, really do need help. And then overall, rising mortgages and rents are taking a larger piece of people's incomes, as I mentioned before. So let's use that to talk about what's happening broader in the real estate market. When I talk about on the next slide that residential home values are still increasing, but we're just not seeing people churning their homes. So I don't know how many, I can't really see the show of hands that have a fixed interest rate in under 3%. But I know there's probably a few in your audience smiling. I just wanted to let you know you beat an economist who does this for a living. The best I got was 3%, and I know there's a lot of people out there even lower, and that's causing people to not want to expose themselves. 30-year fixed today was 7.6%, 15-year loans are at 7% on average around the country. So one thing that I just wanted to point out that a lot of people aren't aware of is you can sell a home and assume a mortgage, or buy a home and assume the mortgage of the prior person under certain circumstances. So for instance, all Alaska housing loans are assumable. Many VA loans, or all VA loans are assumable as long as and you can even not be a veteran buying it as long as the veteran is willing to endorse their benefit to you. So we are starting to see more of these types of assumable loans. Even some brokers are advertising that their loans are assumable. So this is the type of thing our sister company Residential Mortgage can help you out with, and to better understand, because many people aren't listing their homes because they're not sure if they can get a mortgage in a reasonable rate, and there might be other options that people just aren't generally aware of. There's also instances where you can sell your house to a relative and they can assume your mortgage. So a lot of little caveats I don't want to get into the weeds on, but this is why financial experts like we have at Residential Mortgage in Northrim can help you out with some of these specific issues going on. In the interest of time, I'll move on. Office demand has been declining, especially you're hearing in big cities. Real quick on that last slide, just to finish a couple thoughts. It's not happening as much here in Alaska with office demand being such a problem that you might hear in the national news. Industrial and warehouse, I think, is very tight due to lack of supply, and there is more of a return to manufacturing in the U.S., and we need to keep more goods locally to make sure that the supply chains don't break down. So having more industrial, I think, is going to be a positive real estate investment. And then finally, multifamily is doing really well. The younger people tend to be more mobile, more willing to rent, not as interested. Or if you could go back a slide there, Carrie, not quite there. They're not as interested in home ownership, and they're also getting married at lower rates. So I think we're going to see more of a trend into multifamily and rentals at a national level, and really generally trying to incentivize new housing construction is going to be the most important thing for governments and local communities to get involved in. We're seeing a lot more housing authorities and other groups trying to bridge that risk gap to help the builders, incentivize them to build more loans, maybe giving them tax abatements, maybe giving them the land in kind, doing some sort of public-private partnership, because of these high interest rates and uncertain supply chains, builders are seeing it difficult to enter into this, especially if rents are sort of maxing out versus the cost of construction. So we certainly want to help if we can, share knowledge, as I have with the local authority here in Kodiak about some of the types of deals I'm seeing come through to help incentivize new housing construction, because I think this is a major issue, not just here, but all over the country. Really quickly on the next slide, we briefly showed there the change in interest rates. I mainly just wanted to highlight on this next graph that going back to 1972, you can see the last big ramp up, we'll call that Denali over there on the left, that mortgage rates got up to 16.6. So just as some of you might have been smiling at your 2% mortgages, some of you also might have remembered in the 80s having some mortgages in the teens. But what we have had over the last 40 years is declining interest rates until January of 21. We hit a low average of 2.7% for 30 years. But that has jumped up to now over 7.5 this month. Last month was 7.3 on average, so you can see we're at 7.6 today. We're starting to continue that line up. The commonality with the 1980s was, during Jimmy Carter, hyperinflation then, and we're seeing a stiff run-up in inflation. Now the hope is that, as I mentioned earlier, that inflation is moderating and even starting to decrease, the money supply is decreasing. I think the Fed's policy is now reflecting the fact that even though they're only changing overnight one-day lending rates, it's having an effect all the way out of the 10-year and 30-year yields, and they're realizing that this yield curve is getting very strange. So the hope is that they'll slow down their increases again in November as they paused at their last meeting. On the next slide, I cover foreclosures and delinquencies, mainly to try to show that there really has not been a problem in Alaska. The left column is where we were in Alaska delinquencies at 2.9% back at the end of 2019. That did get much higher during COVID at 6.2%, but by the end of last year it was back down to 2.9%, and we're even lower at 2.8% in the second quarter of 2023. And the other moral of this story is that U.S. delinquencies are much higher than in Alaska during all the periods. So relatively, we're doing good in Alaska. The same below in foreclosures. They continue to decrease. So I watch these very closely on a quarterly basis, and we're not seeing a foreclosure delinquency problem. So I think the market is healthy, even though the prices are very high currently. On the next slide, I would say the major issue of what's happening in the market, I teased a couple times during the presentation, is the average sales price continues to increase. So this is increases in some of our larger communities, and this is on top of many years in a row. And Matsu prices have been rising for over 10 years in a row, and Anchorage over 6 years in a row. So we're still seeing price increases through the first 9 months of 2023, which is pretty amazing considering the interest rate environment. However, again, because of lack of supply, that's not happening. So when I say lack of supply, look at the column on the right. The average number of units sold over the first 9 months of this year compared to the first 9 months of last year, we're down 25 to 29% in units sold. So there's just not as much activity. And I think I've covered the reason why with the difference in interest rates. But those assumable mortgages could help if we spread the word on that. Okay, next we'll talk about interest rates. Real quick, on the graph here, the bottom line is where we were at the beginning of 2022. It goes from 1 month on the left all the way out to 30 years on the right. So the bottom line is an upward sloping yield curve, which is normal. On the red line on the top is where we are today, or as of last week. The 1 month went up 5.5% over the last year and a half. It's also noticeably downward sloping, meaning that people are less likely to think that interest rates are going to stay this high after, say, 3 years. So the 2-year at over 5%, and then the 10-year at basically a 0.25% less is what they call an inverted yield curve, and that is a very interesting dynamic. I think this just means that people think the high lows of interest rates and inflation are going to persist for the short term. Once we get out to the medium term, they expect the Fed to start cutting. Many people are saying the second half of next year. So we might have another year of this level of high interest rates, but then we think they're going to start to come down. So that's the main takeaway from this, but I think graphically it really does show you this interest rate environment has really increased and is also in a strange inverted direction. Okay, just a couple of ideas to wrap up. Overall, I've talked about why deglobalization is an issue. Alaska is strategically in a position from a negative standpoint of receiving a lot of manufactured goods from China through our cargo airports in Anchorage. It's actually the #3 largest cargo airport in the country, in the world. And in our country, it makes a huge impact to redistribute those goods to the rest of the U.S. There could be more movement for manufacturing in the U.S. We're seeing a desire of the government to subsidize things like semiconductors, manufacturing to not have so much concentration in Taiwan. There's talk of more manufacturing in Mexico, maybe similar to the maquiladoras of the 1990s, more just domestic manufacturing in general. I think that though that might be a decrease in goods coming in from Asia through our Anchorage airport, it might increase the demand for our natural resources. So part of the COVID supply chain issues were people wanting to make sure that they had access to the key components of your business. So I really challenge you to think about what are the things that you can't do without, and making sure you have good local source options for those products that make a difference. So for instance, home builders not only were having issues with lumber, but they were also having issues with electrical components. Even garage doors were in short supply. And as we move forward, I think there'll be more of a retrenching to our old alliances, as we're seeing with some of the political breakdown that I talked about earlier with China and Russia leading the way. Positive areas where I see it increasing is military spending, which is always a little scary from a military activity involvement like we're seeing in Europe and the Middle East. But for instance, the Fort Greely missile defense system was $500 million in direct spending. We were just touring the Coast Guard facility in Kodiak yesterday. They've been approved for $600 million over 5 years. They're expecting 1,000 new people to come on, both active duty and their families, into this community. In Fairbanks, we recently had the increase in F-35 activity and all of the money and people that came along with that change. We're also seeing more infrastructure improvements in telecom around the state, in roads, ports, harbors, icebreakers, Coast Guard. I think all of these things are the U.S. realizing again our strategic importance, but it also will have an effect, I believe, positively on the natural resource environment. So a recent news story was the U.S. Geological Survey put out their top 50 strategic minerals list, and the U.S. is very highly dependent. Of those, 31 of them, we had over 50% dependence on foreign countries. Of the top 50, 12 of them, we had 100% dependence on foreign countries. And of those 12, 5 of them were 100% provided by China. So the Pentagon recently announced that they're giving a grant of $37 million to a graphite mine near Nome to try to create, which would be the largest graphite mine in North America, and accelerate that, because graphite is one of these 50 strategic minerals that is needed for batteries, is needed for the future economy. So if we're going to compete renewables and solar panels, which are dominated by China right now, at least one part of the federal government is paying attention to these minerals and many other rare earth elements that, frankly, I thought I did really good in chemistry class, but I haven't even heard of a lot of these things. And I guess Alaska has many of them in large supply, as you can imagine, with such a large and rich state. So though we'll still face challenges from the EPA and environmental groups on moving forward with some of these projects, at least some arms of the federal government are taking this very serious, and I see this as being a tipping point in potentially allowing some of these things to go forward, because many of them are needed in renewables. So even if the belief is that we need more electric cars and solar panels, well, there is a lot of mining that needs to go on to make that happen. And so I think the world's starting to wake up to that, and we're going to see more of that activity in our state. We already are seeing some good news stories this year. The last thing I'll mention in this slide is OPEC and the $1.3 million barrel cut. They decided to extend that through to December, along with what's happening in Israel. I do believe that energy prices are going to remain high. What that means is the state has put out their forecast budget that for FY24, which actually already started in July, state's fiscal year is the middle of the year, they're expecting a $600 million surplus over their budget based on these higher oil prices, and that can really take some pressure off of taxes and other budget cuts that have been affecting education budgets and others. So that extra $600 million is directly impacted by, again, global events happening over our horizon. So the last thing I'll just cover really quick is that oil more directly. On the next graph, I show oil prices. They go all the way back to 2020. Pre-COVID, you can see this huge spike post-COVID. The peak there was during the beginning of Russia's aggression to Ukraine. And you can see more recently where they have been, again, teetering just below $100 a barrel. And so again, anything over $70 is very healthy for the state government. And I know a lot of us say, hey, there's not oil and gas in our backyard, but the reality is we're the only state in the country that doesn't have a sales tax or an income tax at a state level, and that allows our local communities to do that. Some have higher property taxes, some have higher local sales tax, but the reality is we live in the lowest tax-free environment in the country, or low tax environment, and when you couple the permanent fund dividend, some of us actually have negative tax if we have enough kids. So this helps balance that budget, and in the next slide, you can see it's not just a price issue, but it's also a production issue. So the state produced 476,000 barrels last year, but they're actually projecting by 2032 for that to increase to 543,000 barrels. So this is the first time, since the late 80s that we're actually seeing oil production increases. We peaked out at 2 million barrels of oil and have been on a multi-decade decline to under 500,000. But now we're seeing the state actually projecting production increases, which is really going to change if we can have high prices and high production. So where is that happening? You know, in the interest of time, that's happening in Sitka, Willow, CD5. This is extensions of the Alpine Field, the Park Field, and further west out in the NPRA. So despite some of the bad news about Anwar and some of those leases being pulled, most of the development is further west, not east. And you know, I won't get into all these details. Not all of these projects have reached final permitting. Some of them have moved through. But you can see on the list on the slide, this is billions of dollars of investment, thousands of jobs, and hundreds of thousands of barrels of oil a day. That's really replacing the declines we're seeing in legacy fields like Prudhoe Bay. So there's a lot more oil up on the North Slope. There's a lot of energy production. It's really just a matter of federal permitting. But we are predicting increases. The State Department of Revenue, more specifically, is predicting increases over the next decade in oil production, which on top of high prices is great news for the state budget. So with that, I'll just wrap up my comments here. I think I've covered a wide range of economic issues. I know that there's a lot of thought that there's so much more to talk about as well. I just want to let you know that I'm a resource available to you as a bank. I really apologize that I'm not there in person. I really couldn't have foreseen this ash stopping me from getting there, but please work through your local Northrim bank team to find me if you really have something serious that you want to talk about, that you're about to make a big investment decision, you want to see what's happening in the economy. I always love to talk to customers about what's weighing on their mind, because frankly I learn a lot from each of you as well, and the successes of your business and the challenges that you face. So please reach out if in any way I can help. Without reiterating all the major points that I mentioned, I really do think that there's going to be a lot more investment in Alaska for federal spending, some related to military, a lot of good infrastructure, a lot of docks and ports and tourism growth, as well as oil exploration dollars and military spending. There's a lot of reason to think that though the last 10 years have not been that good as it relates to population and gross state product, I do think that the next 5 years at least will be very different from that. One big challenge, of course, is going to be getting people to come to Alaska, but if there's good jobs, high-paying jobs, the state has always attracted people with an adventurous spirit to come up here. Overall, I just want to say thank you for coming today, and I wish I could be there to meet more of you in person, but there will be other opportunities in the future. And thank you for listening to a long, complicated economic speech. Hopefully you found it interesting. I appreciate your time.
Well, I really appreciate it, Mark. Thank you. Thanks, Mark. Appreciate. Oh, there we go. Thanks, Mark. Being Alaska's community bank, we understand the unique opportunities and challenges of living and working in Alaska, and have always advocated for a stable fiscal policy for the state. Investing in the people and infrastructure of Alaska and leveraging our great natural resources will provide the foundation for future economic growth. Northrim, like other community banks across the nation, operates to serve our local communities. We have always been measured and balanced in how we approach our banking operations. Our conservative strategy has resulted in strong liquidity and credit quality. We exceed the regulatory requirements of a well-capitalized bank. We have a diversified investment and loan portfolio, and we have a diversified deposit base with 19 branches that stretch from Nome to Ketchikan. In the last 2 years, we've opened 3 new branches, and we continue to look for opportunities to expand. The diversity of our customer base throughout the state is a source of strength for the bank. As our mission states, we strive to be Alaska's most trusted financial institution and are committed to adding value for our customers, communities, and shareholders. We work hard at developing long-term relationships so that we can help meet your needs and also share our insights on the bank and the industry. We know you have a choice when it comes to banking, and we appreciate your business. Thank you for attending our community summit today. Hopefully Sharing our knowledge will help you not only to survive, but to thrive in any environment. I'd like you to have a great afternoon, and we will be here for a few extra minutes if you either want to yell at us or ask us any further questions. But anyway, appreciate your understanding that we had to use the video instead of being in person. We're very much a relationship-oriented bank, and so it's a little uncomfortable for us to use the technology, although we have very strong technological capabilities, but we much prefer to just deal with people in person. So again, thank you for being here.